Hello, everyone, and welcome to Good Morning Training. I'm delighted to have you back with us. We're going to review the latest news from the financial markets. So, of course, we're in the middle of a war with Iran. We've seen major movements, especially in the gas market, since the main gas producer in Qatar announced it was shutting down all production, even if only as a precaution. Oil prices have gone up, but that's about it. All global indices have dropped. We'll see that there's a big difference between the American and European indices. There's absolutely no panic, no wave of panic at all. The markets are slowly starting to realize that this will probably last. But, well, as far as the military situation goes, I'm not talking politically. The outcome is pretty much set. But militarily, the game's over. From the very beginning of this military offensive until the present moment, a mere 72 hours after it first commenced, there has already been a staggering 80% reduction in the number of missiles and drones that have been launched directly from Iranian territory toward targets within Israel. So that tells us the strikes are effective, especially since as soon as you get the order as an Iranian soldier to launch your missile, you're instantly spotted by satellites. And it's pretty much a suicide mission. You're going to get hit by a missile within seconds or minutes, so having a huge stockpile of missiles, that's great, but what really matters is being able to launch them, and that's where the launchers come in. Every time a missile is launched, there's an 80% chance, or bad luck, depending on which side of the missile you're on, that the launcher will be destroyed. So there won't be any way to launch another missile a few hours later or the next day. So what we see is a slow decrease in the intensity of the Iranian response, and that's something the markets have clearly taken into account. A few years ago, this would have caused a major crash, especially since the Strait of Hormuz is under threat. I encourage you to check out a webinar I did on the Strait of Hormuz. A few years ago, on the geopolitical front, nothing had changed. Everything was perfect. You can watch it again in the current context, and you'll probably think I was a bit of a prophet. But it's not prophecy, it's just history and analysis. So we find ourselves exactly in this situation, where the last weapon left to the Iranian regime is blocked. The Strait of Hormuz, even sinking ships, because the strait is extremely shallow, sinking ships to block it for a while. So for several months, gas prices skyrocket. That's what happened. They went up 200% in 3 days. On the other hand, oil prices have gone up, but not by that much. Let's take a quickly look at the current oil prices right now. And let's go check out oil. Well, actually, I forgot to pull it up, but just so you know, we're almost at $80. So that's not unusual at all. There's nothing abnormal about it. I don't seem to be taking off, and there's a good reason for that. It's because only 20% of the world's oil goes through the Strait of Hormuz. And actually, even less and less, because if you watch the webinar on the Strait of Hormuz, I explained that to you. Saudi Arabia, for example, anticipated this and has pipelines to export oil directly to the West. So, to avoid the Strait of Hormuz, by the way, Good Morning Trading is running a little late today, because I was trading. So around 7 o'clock, 7:15, 7:20, we hit 24,500. That's a zone I absolutely love, really love. So we started to bounce back from there. That's how you get the bounce off 24,500. So I was stuck for about 15 minutes before doing the good morning training. We're going to quickly scan through all the indexes and see where things stand. The CAC 40, it's back to its lowest point of the year. Almost the lowest it's been in a while. 2 months, you know? We'll see that in times of crisis, the European indexes are always much more pessimistic than American ones. I think it's a matter of mindset, where Americans are much more resilient. And it's true that when you're a global leader in a particular economic sector, it's always the leaders who come out best in a crisis. And generally, if there's a really big crisis, for example, an economic one, the leaders come out even stronger because they'll be able to buy up number 3, number 4, number 5 in their sector for cheap. So that's why the CAC 40 might be reaching a stabilization zone. 8,100 isn't far from the yearly lows. We could hit 8,000 and then no one would talk about it anymore. This is the monthly middle S2, so it wouldn't be that bad. Not that bad at all. We're seeing 3, 4 strong days of decline. We're about to start the fourth one. We'll see how it goes, but for now, there's really no panic. We're not being dumped. There haven't been bearish sell-offs on minus 10% like I've seen before. Honestly, it's even sluggish. It's actually pretty weak compared to what we're experiencing. We still have the United States of America and Israel striking Iran, hereditary enemies for, I'd say, 50 years, ever since Ayatollah Khomeini came to power. By the way, Ayatollah Khomeini was a political refugee in France. There you go, we put him on a nice French plane to take him there, to take him over. When the Shah fell, you see, we also had Lenin, we also hosted the NIDS, don't worry about it. All the future dictators of the world are hosted in France. That way, we can relax. It's probably because of the quality of our country when it comes to food. I think that's the only explanation. I don't see any other political reasons anyway. As for the DAX 40, it also hit its lowest point. It even set its lowest of the year, much more affected by anything related to gas, of course. And oil too, since Germany is still a major industrial country, so it faces significant costs in that area. A very high dependence on energy while also being an industrial powerhouse without having oil or gas. It's stupid. But you'll notice that those who have oil and gas are absolutely not industrial powers. Something to think about. As for the DAX, we'll just let it keep sinking quietly. A return to the middle is really alone at the annual low, and it's possible. And it could form a double bottom, which would be a pretty interesting signal. The Dow Jones, look at the Dow Jones. It's at a 2-month low, but it's not the end of the world at all. Here too, it's bounced back again, right on a monthly support at its monthly S2 middle, and it went back above 48,000. So we're still above 48,000. On the Dow Jones, there aren't any particular difficulties. For the NASDAQ, same thing. We hit the lowest point of the year. Not quite, almost, just a few points off. As long as we're above 24,150, there's no risk. Here you can see, you can feel there's an attempt to stabilize and a potential for a rebound that's extremely, extremely significant. We especially saw it on Monday, at the open on Monday. There, the whole sharp drop is due to European pessimism, and then the Americans open and everything shoots back up. And we have exactly the same thing happen on Tuesday, all morning. European pessimism, the NASDAQ is at its lowest, almost at its yearly low, and then the US markets open. And so it bounces back. Don't forget, usually the first effect is this depressive wave in Europe that drags things down, and then it climbs back up after when the US markets open. And it's the S&P 500, exactly the same scenario, red during the European morning, blue during the American afternoon, and so on. Monday, Tuesday, exactly the same pattern. We'll see if it's the same today, but it's important to notice this. That's what I always do whenever there's a big event. I let the markets drop in the morning, call it what you want, but I prefer to just let them fall. Try to spot a rebound in the morning, put a small position on it, and that can set you up for the day's day trading. If you can catch the European low point, after that, in the morning, it just goes up like crazy, and things go pretty well at that point. It's hard to make money, but you can make just a little, because if you get scared, you cash out too quickly. And that's exactly what happened to me on Monday. Unfortunately, I cashed out too soon, and it just kept going up like crazy. That's how it goes. I almost caught the European low point in the morning, but compared to the potential, I got out too early. If I had sold at 10 p.m., that would have been crazy. I probably only took 10 or 15% of the rebound. But still, that's already some money on gold. So gold has obviously had a huge run up since the start of the offensive. But you see, it's crashing now. Why? Well, because things seem to be going pretty well. From the American side, you realize that once the Iranians run out of launchers, they won't be able to launch much of anything anymore. Of course, there's still been some major problems, major political issues, but it's all happening. It's all happening in quotes. Well, even though the media, the 24-hour news channels, the continuous news networks are there. Oh man, what the United States is going to lose and all that. After 72 hours, they want nothing less than a total and absolute victory. If they do it, they're there to make a splash. They create anxiety so you'll watch your TV and so they can show you a commercial break. About cars, for example, there are a lot of car ads. So about the Gulf. And then it collapsed, which is interesting. It went right back to the stagnation zone, around 5,000, 5,100, 5,200. That area started to settle down before the event, before the war in Iran. So we saw an effect that spilled over in the first wave into safe haven assets and so on. Then, after gold collapsed, the media, of course, rushed to say, look at gold, a safe haven asset. Yes, for a very long time. It started. A safe haven asset, at least on the European side, let's say. And then, after that, they took a big hit. Actually, a double hit. Yesterday was really painful for those who bought gold at its peak. Not a safe haven at all. Or at least, there's no market worry about the continuation of the war, as they say, and a nod to our friend Bitcoin. But as for Bitcoin, it's been very steady. It's been stuck between 65,000 and 70,000 at its lowest, and it just won't take off. So it's hanging in there, holding on to that 65,000 mark. That's good news. It's good news for those who have it, except for those who bought in at 95,000 and now it can't break past 70,000. So right now, Bitcoin has been in a range since the beginning of February. It's been a whole month stuck in this range. Is Bitcoin dead? In any case, it's attracting a lot less interest from investors. That's all I had for you this morning. I wish you an excellent day. See you tomorrow for Good Morning Trading, and in about 10 minutes for those in my school. Ciao, everyone. Take care of yourselves. And there you go. Don't panic. If, like me, you've lived through the last 30 years, all the crashes. Well, there aren't any crashes right now. The markets aren't panicking. They're just a bit nervous, a little more on edge than usual. But other than that, I was going to say, everything's fine. Madame la Marquise, there's absolutely nothing to worry about in the markets. Standing on my desk.